What do we have to learn under budgeting, the topic of budgeting? What are the purposes of preparing budgets? Then budgetary control, preparation of budgets, then the systems which are used in the preparation of budget. So that's another topic. And then how control measures are exercised. That is another thing. So first thing is, what are the purposes of preparing budget? But first, if we understand what is budget, what do you think is a budget? You can also write your answer in the chat box if you don't like to speak on the mic. You can also put your answers in the chat box. What do you think is a budget? Any one of you? Three are there, isn't it? Kirti, Crystal, Anand, Manjushri. What is the meaning of budget? I hope I'm audible. What's the meaning of budget? Okay, it is estimation of revenues, expenses, including the financial details about various aspects, not only revenue, expenses, assets, liabilities. See, the financial terms which are included in a plan. It is basically a plan for the future, but those items are, the plan is presented in financial nature. So that is a budget. Budget in simple terms, if you put it in one line in simple terms, if we have to present that, it's called as a financial plan, which talks about estimation of revenues, expenses, assets, liabilities, the transactions for the future. So why is that budget is prepared? So budget is prepared, a plan is prepared to ensure that everything goes well in the future. So even before the future period of time comes, the plan is already prepared and is kept ready. And then when the plan is implemented, at that time they check the um, actual transactions with the plan, and then if there are any deviations, measures are taken to control the deviation. So that's the whole purpose behind that. So that is presented in terms of various points which are given here. What are the purposes of budgets? The purposes of budgets are to see that there is a plan in place. If there is a plan in place, implementation becomes easy. If they know what has to be achieved in the future, then things can be taken up accordingly. So planning becomes possible. Um, so planning helps them to decide how the transactions would take place, how they are supposed to implement the transactions. Once there is a plan, then everybody understands that. So the plan is communicated to everyone in the organization. So there would be coordination also, which becomes possible. The plan is communicated, so they understand what they have to take up. Everybody works towards achievement of the objectives, achievement of whatever is decided for the future. Then things are taken up accordingly, and there is coordination. Everybody works towards that. Then after that, we see that there is also a comparison. The budget cycle goes like this. First, the budgets are prepared. So the budget, once it is prepared, there is a way in which the budget is prepared. That is either they discuss with others in the organization, or the top management decides on what the budget should be and prepares the budget and then communicates to others in the organization. Both of them have their own set of advantages and disadvantages. But first thing is a budget is prepared. After the budget is prepared, this is prepared for the future period of time. So during that period of time, when it is the time for implementation, so there is a comparison made with the actuals are compared with the budgeted figures. So implementation takes place as a comparison of the actual figures versus the budgeted figures. So this enables them to understand if there are any deviations. Earlier also, some context I have explained to you the concept of taking into consideration the example of Google Map, wherein whatever is the destination which has to be reached to, that is already fed into the app, and the app suggests the route one should take, and if the person takes a wrong route, and then suggestions are also given about how to come back onto the right route. So same is the case in here, in case of budgeting also. Once they take the right track, if they see that there is a deviation, first when on comparison of actual with the budgeted, if there is a deviation, measures are taken to correct those deviations. So first they would examine on comparison of what is actual with the budget. So they also would examine why there are deviations. So examining takes place. After examining, measures are taken to correct the deviation. That is, come back onto the right track. So this will talk about corrective actions. Sometimes it is also possible that they might have decided on the budgets being over ambitious. So in that case, it is, if it is not possible, um, if it is not possible to implement uh, the plan or the budget, then measures are taken to, even to the extent that the plans are revised. So that's the cycle which takes place. And in this process of comparing the actuals with the budget, if there are deviations, corrective measures are taken. So that also helps in controlling the performance. So the purposes of budget are planning, communication, coordination, evaluation, then to take decisions for their individual unit or department. They are also given authority to take decisions, authorization. Then when everybody is involved in preparing the budget, if their feedback is collected, then that acts as a motivation to the people in the organization at various levels. Then if there are deviations, corrective measures are taken. So that helps in controlling the performance of the people in the organization to ensure that they achieve the targets which are decided in the plan. Okay. Budgeting, what is the meaning of budgeting? Budget is a financial plan. Budgeting is the process of preparing budgets. Budgeting is the process of preparing budgets. So what are the steps in preparation of budgets? So let's look into this. What are the steps in preparation of budget? The key budget factors uh, um, are identified. what are the things for which the budgets are to be prepared, the key budget factors are identified. So how does it happen? I'll just put you to a Word file, and then we'll look into how things take place, and then make a note of it also. So the first thing, in under preparing budgets, if we are talking about preparing of budgets, the key budget factors are identified, and it starts with preparation of the first budget which is prepared is called as sales budget. So first one is sales budget. If this is the first budget which they prepare, what is the reason for that? Every activity is connected to the target of selling some n number of units. So if they have that goal and objective of selling some x number of units, the first thing which is prepared is sales budget. What is the value of sales? Sales is the selling price per unit into how many units are they planning to sell, at what price are they planning to sell, is what has to be decided. If they can decide this part of it, selling price per unit into number of units, if they take it up, they understand about what is sales budget. So if this is the target which has to be met. So preparing a budget, there are basically there is a comprehensive budget which is prepared, which is also called as master budget. See, all the budgets included into one budget is called as a master budget. Master budget is basically compilation of all the budgets which are prepared. What are the budgets? There are, broadly classifying, there are two types of budgets. We see the first one is operating budgets. The second category is financial budgets. There are only two types of budgets, broad classification. So under operating budgets, so the first category here under preparing budgets talks about operating. So under the operating budget, sales budget is the first budget which is prepared, and sales can be calculated as number of units which are planned to be sold into the selling price per unit. Is very simple. It could be like if they want, if they have different units at different places geographically, there are many units, or there are many products for which the products are sold and all. So categorization could be there, like depending on the product or service or area wise, market wise, division wise, like that. They can again split it up into according into that particular category. Basically, what is prepared or what is planned here in a sales budget is how many units are they planning to sell, at what price are they planning to sell. Sometimes they may offer different selling price to different markets. So considering that, so each market, how many units they would be selling, at what price they would be selling, if that is calculated, that is sufficient. Now, usually in case of production, see, if they understand how many units to be sold, they also will decide on to sell that many number of units, how many units have to be produced. So the next in the order, next in the sequence would be about the production budget. If they are selling X number of units, some N number of units are sold, to sell them, how many units they have to purchase, how many units they have to produce. See, it is not possible that they would be producing only as many number of units which are sold in the future. They generally have a policy of producing more number of units than they can sell. So plan talks about how many units they will be able to sell, estimated only, but they estimate how many units would be sold. So if that is the case, will they take up producing only that many number of units or more number of units? What's the answer? Will they produce exactly equal or more number of units? Answer me. You have to answer. See, I do not know to whom am I talking. Right, wrong, something you say, no? Will they produce equal number of units as much as they would be selling, or they produce more number of units or less number of units? Any answer for that? They produce more number of units, not less number of units. See, to sell, let's say 1,000 units are to be sold. By producing less units, they will not be able to sell 1,000 units. No? So they produce more. It's not even equal. If they are planning to sell 1,000 units, they generally produce more than that. Um, the reason why they produce more is, see, to be prepared in case if there is any unexpected demand arises. Suddenly customers want more number of units. So to cater to the requirements of the customer, generally they take up producing a more number of units than what they are planning to sell. So the production budget is prepared in this fashion. How many units are to be produced? For that, production budget is equal to, see, you must be aware of the T form of trading account. T form of trading account. So what do we have? This is trading account. On the debit side, the first item what we have is the opening stock. Then we have a list of transactions like the purchases, then the costs which are paid to convert the raw material into finished goods, purchases, labor, overheads, any number of things which would be there, all of them are incurred for the purpose of producing the products. Then on the credit side, this is a condensed form of trading account. On the credit side, we have sales, and apart from sales, we also have the closing stock. So these are the items what we have in the trading account. So instead of writing it as the amounts, if we look it at as units, if we can look into that, the units which are produced plus the units that are purchased, um, sorry, the units that are there in the opening stock plus the units that are produced, all of them together is the number of units produced. So these are the available stock. Out of this, a part of it is sold, a part of it is unsold. So how many units are produced if we write? So the equation will be opening stock plus production units is equal to closing stock plus sales. So if production, this part of it is production. If we are to find out what is production, number of units to be produced, how many units will they produce? If this is what they have to find out, the equation will look as sales plus closing stock minus opening stock. So make a note of that. Production budget or number of units to be produced is equal to sales plus closing stock minus opening stock. Then, if the production has to be taken up, The production is basically involving many transactions. That is, material, raw material has to be purchased, then labor cost has to be incurred, overhead costs have to be incurred, then only the production work will be completed. So here we see that the next in the order is purchases budget. How many units have to be purchased? So here the same logic applies here about plus the closing stock and minus the opening stock. But here this time it is not the finished goods closing stock, but it is the raw material closing stock. In place of sales, we would have it as production. So production, number of units of production plus the closing stock minus the opening stock. So now the next in the order is we have labor budget is equal to number of labor hours. How many ever are the number of hours which they spend? Number of labor hours into rate per hour. So that talks about what is the cost of labor. Number of labor hours, how many hours did they spend in producing the product? So that many number of hours multiplied into rate per labor hour talks about what is labor budget. Then next in the order we have overhead costs. So we have overhead budget. Overhead budget is specifically prepared factory overheads. Then factory overheads are incurred, administrative overhead, selling and distribution overhead. These are the things which are incurred. So overhead budgets again have to be understood as whether they are variable in nature, fixed in nature, semi-variable in nature, and accordingly the budgets are prepared. See, administrative budget is always a fixed budget. So administrative budget, the same amount would be forecasted for the future. Selling and distribution again is a, it could be a variable, fixed, and semi-variable. Any component of that can be included in the budget. Okay, so a list of items like starting from sales budget. Sales is there. The various stocks are there, opening stocks, closing stock, and then the number of units which are produced, the number of units which are purchased, the labor cost, overhead cost, all of them are available. So with this, they can prepare a budgeted income statement also. That comes under operating budget. Let's get back to the PPT. So the PPT talks about the first thing is key budget factors have to be identified. After that, assume sales is the key budget factor. So starting point is sales. First, they have to estimate about what is the uh, amount of sales which they would be making in the future. So that's the first step. They have to understand that first thing. After the sales budget is prepared, then based on that, the production budget also will be prepared. The production budget, to prepare the production budget, we need to have an understanding about what is the policy of the company in terms of the inventory levels which they want to maintain. Generally, they produce more number of units, or they want to keep some stock as closing stock in case there is any um, demand arising in future. Suddenly they will be able to meet that demand with that additional production which is taken up. So after the inventory levels, we see the production budget, which is sales plus closing inventory minus opening inventory. I explained you what the logic behind that is. After the production budget is prepared, then other things like how much material has to be purchased, then what's the machine usage, labor cost, all those things are estimated. So then the preparation of raw material inventory budget to determine the plan change in raw material inventory level. So here, when they are preparing the production budget, so they also take into consideration about what is the raw material, the purchase of raw material. Purchase of raw material, the same logic which is used for production budget, it is applied, but in place of sales, we would put it as production, the number of units which are produced. So preparation of raw material purchase budget is the material used for production, raw material used for production. So production budget, raw material used for production, plus the closing inventory minus the opening inventory of raw material. So that talks about purchases budget. Then we have the other overhead costs, overhead budget, administration, research and development, selling and distribution. These overheads are to be prepared. Then I told you that there are two different types of budgets. One is the first one talks about what is the operating budget. So all that what we have discussed just now, they come under operating budgets. Then we have the financial budgets. So what are financial budgets? The financial budgets talk about the budgets which are prepared to take care of the financial aspects. So first one is what is the capital budget is what is prepared. That is the capital expenditure required to be invested into assets. What are the techniques and all? We would not learn here. Some other paper we will learn about capital budgeting. I think P2 or some paper you will learn about what are the techniques of capital budgeting or how decisions are taken under capital budgeting. After the capital expenditure part of it is done, then the finances of the cash, rather specifically the cash requirement during a period of time has to be estimated. So the cash requirements, to understand that a cash budget is prepared. Why do they have to prepare a cash budget? See, the logic behind that is the cash is generally not kept available in the business, because cash kept in the um, just kept it idle doesn't give any return. If it doesn't give any return, the alternative course of action is cash is invested into some investment proposal. So the investment proposal into which the amount of cash is invested will give some return. See, even if you keep cash in a cash box for n number of years, also the same cash would be there, just like that. There would be no growth or increase in the cash balance. But if that is invested somewhere, that investment will grow, and the value of that investment grows, and then there is some amount of profit which is realized. So also in a business, if whatever is the cash which is available with them, if they keep it just like that idle in a cash box, or sometimes a savings account wherein not much return is earned, but if it is kept like that, cash in hand, cash in bank, there would be no use out of that. There is no there is no return earned on that. So for that reason, cash is not kept available, but it is always invested somewhere. But on the other hand, if cash is not available with them, so they will be held tight to meet their day-to-day expenses. So they cannot meet their day-to-day expenses. In that case, that is a problem there. So the ideal amount of cash has to be ascertained. How much cash would they require during a period? So the next budget what is prepared is a cash budget is prepared. So this talks about what are the transactions for which there is a cash inflow or cash outflow. How cash has come in and how cash has gone out is what has to be looked into. So for that reason, a cash budget is prepared. When we work it out, I will show you how to prepare a cash budget. Basically, we understand about what are the cash receipts which would be received during a period. As against that, what are the payments which are to be made? Then understand, do they have sufficient available cash to make all the payments? If at all, if they do not have sufficient amount of cash, from some source they raise some amount of finance and use it, keep it available to meet the cash payment. Because if cash is not paid promptly on the due date, the reputation of the business, the goodwill of the business gets affected. So that is a serious thing. So therefore, whenever is the date on which they have made a promise to make the payment, ensure that cash is made available. So how can they keep the cash available? By preparing a cash budget. See, to understand how much cash did they receive during a period, how much would be received during a period, how much cash they would have to pay to make their payments. Both of them are compared. If what they have is not sufficient, they go for raising a loan. Or if they have more amount of cash balance available with them, they can consider it investing in somewhere. Okay. Preparation of a cash budget, a working capital budget, and a capital expenditure budget. Then all these budgets together. So once they prepare the capital expenditure budget, cash budget, they will also be able to prepare a budgeted balance sheet, budgeted cash flow also will become possible for them to prepare. So all of them together, the list of operating budgets, the list of finance budgets, all of them added together, uh, combining them, comprehensive budget is called a master budget. So all of them added together, consolidated or brought together into one budget, that budget is called as a master budget. Preparation of a master budget, the summary of all functional budget. It includes a budgeted statement of profit and loss, statement of financial position, and a statement of cash flow statement also. So all of them included, it's called as master budget. So the equations are given here, what we have just now discussed. Material usage budget is equal to the production budget into standard material usage per unit. To take up the production of n number of units, per unit how much of material does it require. So that is how the requirement of material for the production can be estimated. So we wrote it as material budget, material purchases budget is equal to the production budget, so the number of units of material required for the production. Plus, because 1 unit of finished product, if it has to be made, how many units of raw material has to be used? the material required for the production plus the closing stock minus the opening stock. Then material usage budget quantity plus the closing inventory minus the opening inventory. If we have to find out the value of purchases, just multiply it into what is the cost per unit of raw material. So we get what is the cost of budgeted materials which have to be purchased. That is purchases budget. What are the advantages and disadvantages? The advantages and disadvantages are the budgets which are prepared, they communicate the goals. So what has to be achieved will be understood clearly. Communicates goals. It considers the future. Plan is for the future period of time. So what would happen in the future and what course of action has to be taken in the future can be understood clearly. Okay. Considers the future. Then it prepares for change. Um, Whatever would be happening in the future is estimated and accordingly the course of action is taken. Then it improves decision making because the implementation has to happen in the future, the planning is taken up and then the plans are implemented and decisions are taken, sometimes even to revise the plans. Maybe it is not feasible that they can implement those things, so they are considered for improvement or improvement in terms of taking decisions. Already they've decided on what the plan is, but then later on if it is not feasible for them to implement, they can also alter those plans. Then it is motivating. See, everybody knows what has to be achieved, so they start working towards the achievement of that. And in the process of preparing budgets, there are situations where people from all levels of management are called in to contribute their feedback, so that based on that feedback, um, budgets can be prepared. So when their feedback is counted at the time of preparation of budget, that acts as a motivating factor. So it motivates them. What are the disadvantages? So if the whole process of budgeting itself is time consuming. So that is one major thing. But of course, even if it is time consuming also, there would be a plan on in hand. So once there is a planning, I think the implementation becomes very easy. But as a disadvantage, when we look into that, straight away instead of implementing that, they have to spend a lot of time on planning. So it's time consuming. Then it is open to manipulation. Budgets, when they are prepared, the budget cycle, what I have explained to you, that is the budget is prepared, then implementation comes. Their performance is compared with the budget, evaluation takes place. Then later on, reasons why they have why there was a deviation is looked into. Then sometimes they are considered for appraisal. They are motivated in terms of being rewarded if they have achieved. If they have not achieved, then they can be asked to give an explanation. So their performance is observed all the time. How they are implementing, what did they plan, what does the plan say, and how did they um, implement that, if that is considered. So at the time of giving feedback, they do not give standard feedback. So they say that if it requires to be incurred 20,000, they would include it as 22,000. So the right standards are not included, but loose standards are included. So they don't have to put in effort to all the time keep a track of their cost, control their cost. So that gives a chance for manipulation. So it is open to manipulation. Then, if there is a budget, the budget period is for whatever is the period, the focus will be only for that period of time. So the view is not about in the long run what does the organization want to achieve. Instead of focusing on that, they would focus only on the time period, the budget period. So encourages short termism, encourages overspending. Okay. encourage overspending. See, because they are allowed, maybe they can control more than what is included in the budget, but by including a standard which is not, sometimes it is not the right standard. If it requires only 20,000 to be incurred, if it is included as 22,000, employees also continue to spend until 22,000, because that is what is allowed. So encourages overspending, can deter innovation. So they go according to whatever is the plan. They may not think in innovative ways and then bring about innovation into the organization. So that is another disadvantage in case where budget is in place. Then we have a term, uh, sensitivity and stress testing. What is sensitivity and sensitivity analysis? Sensitivity analysis, stress testing, simulation, all of them talk about what is the impact it would have on the output when inputs are changed. So there is, for the set of inputs which are used, what is the output which can be generated